All right, we've got crude oil strengthening today, but I'm not sure that means much. But first, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for crude oil. So as we've been discussing, crude looks to be stuck within this, what I'm calling a rectangle consolidation pattern. A breakout attempt occurred yesterday, but it failed, and you can see we had a potential, well, we had a reversal day. Whether that follows through on a reversal remains to be seen. The next attempt was made today with a rally above yesterday's high, and you can see how resistance was found right around the purple 20 moving average with today's high of 70.01. The 20 moving average is at 70.15. So here's what I'll say about crude. So until we break out above this range, it's not much is likely to happen other than going up and down. The high of the range is 73.27. The low of the range is now yesterday's low at 66.85.86, let's call it. So we could see a rally above the 70.15 20 moving average. If that happens, maybe we see another test of resistance at these highs, and that means there could be an upside breakthrough. On the downside, a breakthrough this low means that this previous low is very likely to be tested. Another break. You can see we broke through here one day and then here one day and didn't go anywhere. So this is what makes trading out of a consolidation where there's been momentum pretty tricky because you could have flipbacks the other way. Anyway, a drop below the low then has this previous low 65.65 tested as support, and I think there's a good chance that that is busted to the downside, putting crude heading towards this swing low at a minimum of 63.67. That's if it keeps falling. Okay, just because it breaks down, it doesn't mean it's going to keep going. And the same to the upside. And the first upside target is the 61.8% retracement at 74.60. Not much to the upside if that is resistance, of course. Okay, that is it for crude oil traders. Have a great week. Gold continued its counter trend rally today, rising above the uptrend line. But first, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for gold. So, the other thing I wanted to mention about gold before that I discussed in the article today, but if you look at the last correction, this correction right here that we've just had is the second largest correction since back here in April 23, which seems to indicate to me that that low may be the low for a little while. You could see that this was roughly, I may not have it on the exact level there, $250 down, 9.1% down. Something along those. Here we go. 9.1%, 253 down. Okay, this last one back here was 271. All the interim ones were less than this one. So this is the biggest correction so far that we've seen since way back then. So two things. That means either gold price is coming apart or that this correction is over with that low. I should say over, that the bottom is in, or potentially in, on this correction. Maybe. Anyway, we'll have to watch as the counter trend rally takes place. You can see today gold exceeded the trend line. Not that that's that big a deal, but it's a more bullish indication than if it found resistance there and stopped and turned back down. So that look means it's very likely heading towards a test of resistance at this 50 moving average, the orange line at 2,656. And since there is some confluence up here around the purple 20 moving average, this previous swing high right here, and this and the 61.8% Fibonacci retracement. So we have a target zone right here around 2006.84, and I think there's a good chance that is reached and tested as resistance before this counter trend rally is complete. That doesn't mean it goes straight up to there, though. We'll have to watch and see how the advance continues to progress. And of course, Weakness is indicated on a drop below today's low of 2006.10. Okay, that is it for gold traders. Have a great week. All right, we've got a breakout attempt in natural gas that we've been talking about, but no follow through. Before we go further, a quick word from our sponsor. This video is brought to you by XNS, the world's largest retail broker, offering ultra-fast executions with no overnight risk. Find a link in the section below. This is Bruce for FXEmpire, taking a look at the daily chart for natural gas. As we zoom in here, you can see that it reached a high of 306 today, breaking out above this previous swing high at 302, which also matched this recent high of 302. But there's no confirmed breakout because the natural gas looks like it's going to close below that breakout level. So maybe it makes another breakout attempt. We need to have a daily close, above 302 to confirm the breakout. There's two breakouts happening. One is the large breakout of the big symmetrical triangle pattern, which we may see evidence of soon, or it may take some time to play out. But then we have the near term rising ABCD pattern here that is now has a higher swing high, but this breakout needs to be confirmed with a close above 302, just like the symmetrical triangle breakout needs to be confirmed. Once that happens, then some of these higher price levels come into play for natural gas. Of course, there's always a possibility it's going to pull back first or fail and pull back, and that would first be indicated below today's low of 290 and a half. Then we have support down here at the 50 moving average at 274. So we're in a key area right here. Let's watch closely and see what happens. That's it for natural gas traders. Have a great week.